Hey, good afternoon. This is Neil with Simpler Futures, Simpler Trading. It is Wednesday, CPI day, and it's near the end of the day. The closing bell hasn't quite come in yet, but we're getting close to the end of the day. So what you see on screen here is the price action for the last couple of days, and that was the low of the move down here, 44, call it 20 or something, up to this 45, 20, almost 4 today. And so earlier in the week, we were together last, I think Monday, and we, said, look, just got to wait until Wednesday. It's what matters, and let this thing decide. If CPI comes in a little light, then of course the market will catch a bid, look above 4,500 up into about 20. It traded 24, and if it comes in hot, that it'll break, and we had bearish targets. Over under, for reminder, is probably still important for the future, but not for exactly right now. And remember, that was 44.51. Above that, you lean long. Below that, short. 51's triggered, and that was yesterday, Tuesday, and there's follow through today up to the high, 45, basically 20. So what does that do? All right, here's the way I'm looking at this, and that is that the next thing that we have is tomorrow PPI. I truly don't believe that that's going to be anywhere near as important as CPI was today. The PPI has been coming in, kind of low already anyway. The CPI today was an opportunity to see, is it going to really improve the way the forecast had it? And that was year over year at 3.1, down from 4.0 year over year. And it actually came in even better than that. It came in at 3.0, a full percent lower than prior. So this is obviously, market sees this making headway in the right direction. The dollar got hammered. The treasuries caught a bid. Gold, copper, silver, everything caught a bid, along with the stock complex, etc. So tomorrow PPI doesn't matter like CPI did today. I mean, it'll be a number, but not like today. And then Friday we get Michigan consumer sentiment, and that's a prelim that does matter. And the earnings kicks off with like J.P. Morgan, Wells Fargo, BlackRock, United Health, a number of them, right? That so we'll get to see some of the the initial kind of reporting coming in, and I think that does matter, right? That'll give us a kickoff into earnings and what this going to start looking like. What this price action looks like now, no, that's the calendar, what to look for coming up. But what this price action looks like is pullback and then continue. And at least another high above this high. Probably put it into like 42. The very next level that I've got up above is like 42.35, but then maybe 42.50 or 45.35 and 45.50. I'm sorry, on the top. Just misquoted the handle, but the price, the extensions are correct, the 35s and 50s on the top. And then remember what we've already been discussing early in the month, and that is that the first half of July historically is bullish, and then it's done. So that puts us into, late this week, and that's it. So if that follows true to course, then what it would mean is that we're going to pull back a little bit. I'll point to a spot here, make a new high, carry us into the end of the week, and then it's done. And so we'll look forward to the first half of July, historically mid 70s percentile, going all the way back into like 28 or 1928 or something crazy like that. And then that's it. So where is the pullback? Okay, so I snapped this from the bottom of the move here, the fib to the top. Notice that we had a 78 high here leading into about a 45.12 open this morning, but it pulled back into really close to what I was calculating as being the gap mid. I had it as like 95.5 as being the gap mid, 97 low today. In fact, we were trying to buy 95 halves in the trade room today, traded 97 low. And, that's interesting when that happens. But now, with that 97 low and this 78 high, there's still a gap, and a gap mid on that is going to be about 86. Well, look, and lo and behold, where the 382 retrace is on the entire move, right about the same on what is now the remaining portion of this gap, the gap mid, right? And what else is there, interestingly, is the CPI news print from this morning, 83.5. The news print where the market was when the number came in this morning, where everything was said to be fair and balanced at here's the price, and then we got new information, CPI. That price was 83.5. Well, that's our over-under. Okay, if below there, then first of all, if below today's low 97, then you know it's going to hit this 83.5. And I mean, that's what it would be en route for, to resync with the newsprint. If below there, then we'll call it 75, 74, 75, whatever. 75 is probably good enough, which is a half back, and it closes the gap. That would be my second level line of, kind of defense, i.e. But I really, honestly, am looking for the first one here at like 83.5 to hold. If below there, then close the gap, and we'll call it 74. But my thinking is 382 retrace and then new high, because PPI doesn't matter, and in my opinion, it doesn't. It doesn't matter like CPI did today. The earnings Friday will start to matter. So it's going to hold. I think anyway, it's going to hold into getting that information. And then we'll see next week about, okay, is it over? A new high, though, first, above this. And then we'll talk next week about, okay, is it over? And then we get a nice pullback. Because this is long in the tooth. We all know it. So anyway, that's what I got. Good trading. Nice evening. Be with you again at the next update. Till then, take care.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency. It's one of the things that won me